Good day, all. Ira Epstein of Linn Associates with your financial market wrap-up. I guess I'm going to be an April Fool. It's April 1st, 2019, just after 4:30 p.m. Central Daylight Time. Wow. You know, you got to feel like a fool if on the break in December and you looked back and you get this vertical line and you go, why was everybody so scared? Maybe the question is, why did the market break the way that it did? But now that we're up here, a couple of percentage points away from all-time highs, you got to ask yourself, what goes on? So rather than guess about it, let's take a look at the chart action. First off, I think you can see what I'm talking about. Almost a vertical line. Yes, we had this one step back, but if you really look at the pattern, on a closing basis, it's been consistent with higher and low closes. So the first time we get on a weekly basis down, I don't know what it's going to mean, but it's going to be different than it's been since Christmas, okay? When we take a look at the current chart action and take away where we're at right now, you came up, you came down, and the question is this the resolution of the sideways action or not? Well, we're going to get an answer very quickly. Want to point out strong up days on Monday in the stock market, according to Yale Hirsch Stock Market Almanac, often mean what? Tuesday reversals. Not all the time, but it's something you watch. In taking a look at the higher highs, higher lows, certainly an uptrend. The resolution was decided on this pattern. If you look at the highs back here, it was 28, let's get it exactly for you. 28.35. We came back up on Friday to 28.40.75, putting on the daily chart this. I'm pointing this out because on the weekends, we do a weekend edition, as you know, and on that weekend, I don't get to do the daily chart. So that was one part, and then the market lifted off today. Combination reason in the fundamentals, China PMI, US PMI, everything looking a little better. The manufacturing in both countries picked up today, according to the data. When we look at moving averages, the market had been fighting at the 18-day moving average of closes and has now moved up. There's no major moving average that I determine above the market. You've got the 100-day here in green, the 200, and the 18. So where could the resistance be? Right here at the upper Bollinger Band. So I realize tonight everybody's going to be super bullish, but I got to stick with what I teach. And what I teach says the first challenge of the upper Bollinger Band is often where traders, the savvy traders, come out of part of their position or all of it. That number is 28.7650. Today's high was 28.7350. That gives me an idea to expect some selling when we open, or if we open higher, and if we open, which we will do we go up to that number? I then look at the market as being overbought. So I have a market that I realize the bullishness tonight is going to be rampant. You see it here in an overbought condition. The trend is up and you're approaching again, I want to use the word again, that upper Bollinger Band. Like here, traders got very bullish, you can see, and the market stepped back to the 18-day average. So it's not a small break. It's about 60, 70 points. We'll see if anything goes with that or not. But I'll leave you here just saying I would expect to see some selling there. In the NASDAQ, you are overbought. The upper Bollinger Band is right here above us at the 75, what is that, the 79.70 level coming in. And you don't have a trend. You've got a lower low and a higher high. So what we have is upside bias without the pattern of higher lows, higher highs, and we have momentum that is overbought. When I come to the Dow Jones, you hit the upper Bollinger Band today. Therefore, being overbought, I think some traders took money off the table today. The trend is up, the bias is up, and on the close tonight, you closed at 26,258 over that upper Bollinger Band. And again, I'll repeat it. Only 5% of the time do you trade above or stay below an upper or lower Bollinger Band. It's that simple. When I look at the Russell, the trend is up. Higher lows, higher highs. You have layers of resistance right here at 1579 to 1588. Unlike the other indices, you're not overbought. from just that perspective, if I took the name off all the charts, this one's the furthest away from resistance, but it's also in an uptrend. You don't have all of them in uptrends. The NASDAQ is not in one. Yes, the bias is up. Yes, the momentum's been up. In the VIX, if the market drops down off the strength in these, I would expect to see the pros again selling puts as you get down to the 1201 level, with the idea that the market will bounce back if that is hit to the 18-day moving average of closes. If we look up here, when the market hit that upper area, I think they wrote calls. They were able to get out. Down here, I think they were writing puts and were able to get out in profitable areas. I am concerned if interest rates are climbing again. You've left this bullish mode that you had. You lost your embedded reading. Therefore, I expect on rallies now, as long as that stays lost, the pros to be selling, looking for price in the 18-day average to come together. I see the same identical thing in the 10-year note, although that's not too far away from the 18-day average. And when I take a look further at TLT, I'm bringing it up right now, as this pops in, you're what on the close? If you take a look, you lost the embedded reading. Now, the only day the embedded reading, let me define embedded. Embedded means that both numbers that make up the slow stochastic, and I'm going to have to get away and come back to it, and then I can do this. There we go. Are going sideways for at least several days in a row. That converts a market when it's over 80 to be what I call embedded, locked in. When it loses that reading, just the way you see here, the only time it can get it back is literally the very next day. Now, this doesn't trade at night, so it'll be tomorrow morning that it could do that. The futures can get it back tonight, but if they don't, you come in early in the morning, the odds favor prices will try to make a run over time to that 18-day average of closes. In the June dollar index, you are overbought, and I'm going to repeat what I've said all the way through. I'm very uncomfortable that we had an outside day down, then you went up right into the 18-day average. It throws off all my swing lines. I've seen this pattern before, and I've learned to walk away from it. I would still, if a gun were to my head, say you got the higher lows, higher highs. There is no gun to my head. I prefer not to talk about that. Let it straighten itself out. The eurocurrency is different. The eurocurrency's had a pattern of lower highs, lower lows. The lower Bollinger Band is running away from the market. Running away means as the market approaches it, it keeps drifting further down. Right now it's here at 112.45. When we open tonight, it'll probably drop a little bit more. I know how the pattern works on this, but that doesn't mean you can't get there. In the House of Commons today, again, no vote on Brexit. That weighs on the market. If you're watching Germany's manufacturing, it is slowing down. So there's questions here as to what's going on. Trend down, but oversold. Remember that. So there'll be a number here where it's oversold, where the shorts might get uncomfortable. In the British pound, while we rallied up, this market, by the way, if you looked at the futures at what time they finished trading, I was watching the votes come in. So this market had a pretty good idea as to where those votes were going to come in. We're not in a trend. You broke down last week for support at the lower Bollinger Band, the 100-day average. You're getting a bounce. But you've had a higher high, lower low in a professionally hard market to trade. If you're trying to catch a trend, I don't think there's been one. In the Japanese yen, the market has reversed back to a downtrend. Lower highs, lower lows. I'd expect resistance at the 18-day average of closes. You'd have to get way over this high back here on this day, which was 91.45, in order to negate the downtrend on this pattern, and that would put you right into the upper Bollinger Band. So the bears have control. The bias is down. The momentum's down. The target could be the lower Bollinger Band at 89.98. Bitcoin continues, I think, to act bullish. I've been saying that for a while. I'll probably be on, I don't know if I'm doing the TikTok tomorrow on this or not. I'm part of Bloomberg's team. I have to look and see. But I've been saying since I know the first of the year that I'm wondering, did the market bottom out in December? Because I'm seeing such good support at the 18-day average come in. No, I wouldn't tell people to buy over a Bollinger Band in an overbought condition. But the chart action is not bearish. In Brent versus WTI crude, if you get my daily newsletters, I was writing today that you know, we've lost 90,000 barrels a day of production in the U.S., and since November, 76 oil rigs. So while people keep writing about, you know, we can do so much more with fewer amounts of rigs, something's not right. We lost 90,000 barrels since January. So I'm not buying into that argument. I do agree the technology is better, but you can't keep losing rigs to make it up. You've got to have a balance, and we're not seeing that. So that's bullish in a way because you're cutting back on U.S. supply. However, you're overbought. You're up to the upper Bollinger Band. You've been failing each time you hit it. So I'll let you be the one to tell me the day it breaks out to the upside. I'm not prepared to make that statement. Same goes for the WTI crude. Are you embedding? Well, it takes, what, at least several days where the numbers are over 80 on both the K and the D lines to do that. Today, both over. Yesterday, both over. Not the day before. So going into tonight, you're at the upper Bollinger Band, overbought. I think the smart money probably backing off the market a little bit. Wouldn't surprise me. Doesn't mean it's a recommendation. I'm just telling you how I'm reading the chart. I should have had this arrow, not here. I should have had it on the bottom here pointing up. You've got a higher high, you got a lower low, you're coming into resistance in the rebob. The market has rallied 50 cents since December, believe it or not, 50 cents a gallon. You're going to see the prices just keep going up at the gas pumps. But we know that every spring and summer. You know, tell me the times that it breaks. It doesn't do that. And I'm looking at the market here, 190.50, the first resistance. In the nat gas, we're at that funny time of year where one day it's cold, the next day it's warm, but the amount that you keep using, it becomes the question, and it's not as much because we're not in the hot weather yet and we're leaving the cool. And this market has discounted a lot of that. It is oversold. It is not embedded. It is running the lower Bollinger Band. I would assume some resistance may show up at 276.40, but you got to keep your eye. If you see this red line jump over 20 and it gets up there, maybe it stops at that resistance, maybe it wants to work a little higher, but it is an oversold market, and then it's telling you it doesn't want to embed or convert its posture. This coming Thursday, the 4th of April, I'm going to hold another live webinar. These webinars take place at 12:30 p.m. Central Daylight Time. I sent out the first group of invites to everybody this morning at 11 o'clock a.m. Central Daylight Time. If you didn't get one, call my office. They'll send it to you. The reason is I'm just going to be sending them one more time or so to the other groups that are there, but it's the same names. It's a reminder to them. So we don't have your name on our list. And do we call our list? Yes, absolutely. It's a free invite. It fills up. And what we talk about is what you want to talk about. Bring your questions on the commodity markets, technical studies, do my best to answer them if I know the answer or think I do. ETF stock, to me a chart is a chart is a chart. So we can review it together and try to figure out what to do in markets, and that's the fun of it. Because you need a password to get into it, you have to register, then it is all emailed right back to you and away we go. 12:30 p.m. Central Daylight Time this Thursday, get your invite.